Good morning and welcome to the trade setup right here on BloombergQuint Live. And it promises to be an interesting day of trade simply because we have got very strong handover from the global markets amidst a slightly uncertain day of trade yesterday. So let's put all of this into perspective. One, what the US markets did in Wednesday's session, pretty strong. The Nasdaq actually ended about 2% higher. That blue line, very strong performance. But the Dow and the S&P didn't do badly either, and nudging past the all-time highs, the S&P. So I think the going is very good as far as the US markets goes. I don't know if it's a factor of a reflection of high risks being taken or the risk appetite just zooming up for a whole host of retail as well as institutional investors too. I know it's been uh, spoken about as the Robin Hood traders coming in and putting in the money. I think the insti risk appetite too has not really diminished, and fear as a gauge of volatility has actually come off. There is this very interesting chart on Bloomberg. We'll try and pull that up also for you. But keep in mind that what seems to be happening is that people are not wary of putting in money to work, which is actually a rather good sign. Now, this handover from US, what is it doing to Asia? That's the other big thing. Now, look at this. This is the chart that I was talking about. The US equity option gauge fell to the lowest since 2000 levels. Can you imagine that? Fear has just gone missing in the global markets, in particular the US markets, at least the mother market. Really, is that having its impact on Asia today? It has. I mean, I think the markets that I saw in early morning trade, all of them except Shanghai, everything else seemed to be doing reasonably okay for itself. So HSI, Kospi, Straits Times, ASX, all of them had some uh, green to themselves, and that's actually um, a rather good sign. So, well, actually, this is showing HSI having come off from the highs of the day. Shanghai HSI are separate cases in point, but the others seem to be still doing positively. Let's wait and watch what happens. The SGX Nifty would probably be a clear barometer, and I would think that even if the SGX Nifty is not indicating a green, which I think it is, we'll have a we should have a start which is positive. There are iffy bits on Reliance because Mint is saying that the deal is facing some hurdles. So can that drag the markets lower? Remains to be seen. But for now, it seems that we'll have a half decent start. Remember, the S&P futures too are not really pointing towards much negative. So keep that at the back of your mind. So what's the trade setup looking like? Like I said, I think the global markets handover might just lead the Nifty and the Nifty Bank to resume the uptrend. Lower VIX, India VIX corrected. Remember yesterday as well, positive FI flows may aid uptrend. Remember, viewers, I was telling yesterday, and there's this correlation, right, that people are now drawing. Whenever the FI flows are positive, BFSI does well, and if banks do well, there is still a large portion of our market weightage, and therefore that should be auguring positively. Auto ancillary and defense stocks, as well as mid-cap IT, look strong for intraday rallies. Yesterday, all of these had some long build-ups. The Auto Angs, Bharat Ford, Motherson Sumis of the world, Bosch. So let's see if those combine together with the defense flavor that these stocks have, plus mid-cap IT yesterday also look like building on some positions. So all of these could well aid the mid-cap rally. And remember, it's a really heavy earnings day, more so on the large caps today as opposed to the mid caps. But all of these earnings will have some bearing on what the respective sectors do and therefore what the markets do. Large nifty names coming out numbers. Now, true, some of these will come out post-market hours, likely Tata Steel, likely Promoter Corp. So therefore, watch out for the earnings reportage and the impact that these stocks have today and tomorrow on the markets. And the mid cap and too, some very interesting numbers, viewers, lots of them. But I think all of you should watch out for these three names simply because of the commentary that they've given the last quarter and the impact of the raw material cost on these earnings. So APL Apollo, very strong commentary last quarter, very strong reportage also. It'll be interesting to see what APL Apollo does. It'll be interesting to see what Venky's does simply because the raw material costs have fallen for them. So these two or three names everybody should watch out for. In terms of stocks that will react today, well, three or four that I believe one should watch out for as well. So, Indiabulls Housing and Indiabulls Ventures. Now, Samir Gehlot has stepped down as chairman of Indiabulls Housing Finance. SS Kundra appointed as non-executive chairman, and Samir Gehlot takes over as chairman of Indiabulls Ventures. Now, remember, Indiabulls Housing Finance is an FNO ban, so I don't know how much of a movement this will happen. But Indiabulls Ventures could be the interesting one. Market circles tell me there's an immediate reaction that we could well have some interesting moves on Indiabulls Ventures, so do watch out for that. It's had a bit of a rally, of course, ahead of this. It's a big development. Corporate From a corporate side, it looks the Indiabulls Group now looks very different than what it was a year ago. But I think from a stock perspective, Indiabulls Ventures could be the one to watch out for. Ashok Leyland, the numbers very, very poor. Revenues looked okay compared to the estimated revenues, which is good. But the net loss much wider than estimated. EBITDA loss much wider than estimated. The company's now reported losses in 3 of the last 4 quarters. Keep that at the back of your mind, viewers. It's not been a great last 12 months for Ashok Leyland. But I thought the commentary looked reasonable. And if indeed the con call, which comes out at 11 today, if they speak something positive on the con call, then that could act as a trigger. So uh, here's the deal. I think brokerages have sounded a bit of an alarm, but one or two also mentioned that the phrase statements that came out look positive. So please be mindful that 11 o'clock when the con call happens, and if they speak positively there, the stock could actually tilt other way around as well. But the reported numbers not the best. So maybe we could see a bit of a negative reaction too. So it's a bit iffy when it comes to Ashok Leyland today, viewers. Balaji Amines, and the reason why I point this out is because the numbers just look so strong that it will not have an impact necessarily only on Balaji Amines, but on Alkyl Amines as well. But look at the numbers. Net profit up 70%, margins at 24%. Versus 16.9%. And this was not just natural cost saving, but added advantage that came into Balaji Amines because of the raw material cost as well. So therefore, watch out for Balaji Amines in the session today. And I dare say watch out for Alkyl Amines. It's a very expensive stock, but low liquidity and might just take a bit of a trigger from Balaji Amines. So therefore, watch out for both of these in the session today. And weak results from Aster DM, Thermax, Gulf Oil, all of these looked very wobbly. So therefore, watch out for these names. Thermax in particular, the execution performance, there was weak execution performance, subdued order book, and we've been waiting now for things to pick up, but somehow they're not picking up. I'll be interested to hear from the management today as to what they say about the quarters ahead. So, yeah, do watch out for Thermax, but Gulf Oil and Aster DM2 kind of wobbly. The bunch of results that came out, viewers, I've just chosen the ones which I thought were the most pertinent in the session today. Watch out for Intergroup AV2, by the way. Westbridge has bought some 54 lakh shares, so that's an interesting bulk deal in yesterday's session. Now, what stood out for me was this Goldman Sachs note. They said that some economies in Latin America could see record-breaking contraction not seen since World War II, as it has become the global epicenter of the pandemic. Well, at some point of time, we got to be mindful of that. Yes, the market and the economic dislocations and the disconnect is now well proven. I mean, the liquidity does it for the markets, and if indeed the market focused on companies do well on earnings, then the equity markets will continue to do well or may continue to do well. The economic numbers far from rosy. The only question is, will they last or will they get contained in FY21? I mean, that's the $1 million question, isn't it? Or $1 trillion question, if you will. Thanks so much for tuning into the Trade Setup today. Have a profitable day ahead. Watch out. A lot of earnings coming out, so a lot of stocks could react during the course of the day.